in just 48 hours is the second biggest bank collapse in U.S. history, and it sent shockwaves from Silicon Valley to Wall Street to Main Street. SVB was known as a tech lender and held more than $200 billion in assets. It was hit by a bank run and a capital crisis, as well as rapid rising interest rates. The failure sent bank stocks plummeting. Customers withdrew a whopping $42 billion in deposits by the end of Thursday. In Massachusetts, customers were turned away from accessing their cash and were told to come back on Monday. Deposits are insured by the FDIC.
That is a lot of money to withdraw in the 2 days that after this news came out. But that's usually what happens when these banks go down. But in reality, though, the $250,000 FDIC insured, it goes to show you that banks are a little safer than the crypto. As of right now,
$250,000. The FDIC said all insured depositors will have full access to their insured deposits by no later than Monday morning. And it would pay uninsured depositors a, quote, advance dividend within the next week. But for corporations, it's a different story. For instance, Roku held approximately $487 million, a quarter of its cash at SVB.
Well, unfortunately, Roku is one of those companies that, that put a third of their money in the bank. But as far as them getting that kind of money back, I don't think that's going to happen. I think once SVB sells their assets, then Roku might be getting some of their money back. We'll just have to wait.
Roku said most of its deposits with the bank are uninsured. Could this, the second biggest U.S. financial institution failure since the crisis of 2008, lead to a larger systemic failure? That is this week's poll question. If you go to smirconish.com and cast a ballot, and I hope that you will, is the failure of Silicon Valley Bank an isolated event, or will there be broader financial contagion? Joining me now to discuss is Aaron Klein, a senior fellow at the Brookings Institution and former Deputy Assistant Secretary for Economic Policy at the Treasury Department. Thanks so much for being here, Aaron. What's your answer to this week's poll question? Isolated or more contagion?
Well, look, I don't think this is the type of contagion that's going to lead to a horrible disease that's going to bring down the financial system as we saw in 2007 and 8. However, I'm not sure it's completely an isolated incident either. Look, Silicon Valley Bank isn't the first bank to go under this week. Silvergate, a smaller bank that had leaned heavily into crypto, self-liquidated and went down a few days earlier. There are a couple more dominoes that could fall. So I'm not sure this is a completely isolated one-off event. But I also think the regulators have been telling us that the contagion from crypto is contained within parts of our financial system. And Silicon Valley Bank is big, but it's not like other banks of its size, the large regional banks. So they have a different business model.
Yes, a different business model, but are they really safe? I mean, it doesn't matter if it's a traditional bank or a cryptocurrency company, they're still going down. So there's definitely something going on there. And the majority of, I think the problem with SVB is because of the interest rates, because they were heavily invested in the tech company. And as you know, the tech companies have taken a fall in the past year. And even now, the tech sector is pretty down. And that's the demise of SVB Bank.
Aaron, I've read that nearly all, I don't know how this can be true, but nearly all of their depositors are in excess of the FDIC limit. Does that sound right to you?
So it does, because this isn't, look, it's a $200 billion bank, which is what we would call a large regional. Fifth Third, Key Bank, Huntington, those big banks that you see kind of in large portions of America. Those banks are about the same size, but they have about 1,000 branches. Silicon Valley only had 16 branches, despite being the 16th largest bank in America. How could that be? Well, they didn't take that much money from regular consumers. They took it more from companies. They banked startups, and as those startups got bigger, they kept those relationships. You mentioned Roku is a perfect example of something like that. So companies tend to have money in excess of deposit insurance, whereas ordinary Americans, regular viewers, rarely have more than $250,000 in the bank account. Frankly, a lot of Americans would be happy to have $250,000, period, among all their assets.
Aaron, the Wall Street Journal today in its lead editorial on this raises the question of how will the government respond. I want to read you a paragraph from that editorial. I'll put it up on the screen. It says, "But if SVB was doomed, it is better to let it fail than have the government bail it out, despite what one hedge fund lord suggested this week. Didn't we learn from the 2008 crisis that the Fed's rescue of Bear Stearns encouraged everyone to believe that Lehman Brothers would be rescued too?"
Now to Treasury Secretary Janet Yellen. Madam Secretary, good morning.
Good morning, Margaret.
I want to get straight to it because the markets will soon reopen for trading. Does the government need to intervene and take emergency measures because of SVB's failure?
Well, let me say America's economy relies on a safe and sound banking system that can provide for the credit needs of our households and businesses. So whenever a bank, especially one like Silicon Valley Bank with billions of dollars in deposits, fails, it's clearly a concern. From the standpoint of depositors, many of which may be small businesses, they rely on access to their funds to be able to pay the bills that they have, and they employ tens of thousands of people across the country. We've been hearing from those depositors and other concerned people this weekend. So let me say that I've been working all weekend with our banking regulators to design appropriate policies to address this situation. I can't really provide further details at this time, but what I do want to do is emphasize that the American banking system is really safe and well capitalized. It's resilient.
Can you say whether these problems were unique to Silicon Valley Bank, or can you say whether there will be other regional bank failures?
Well, look, let me just say that we want to make sure that the troubles that exist at one bank don't create contagion to others that are sound, and a goal always of supervision and regulation is to make sure that contagion can't occur.
She has a great point there, and you don't want these banks to continue to fall one by one. You don't want to have a ripple effect, and it's going to look bad on the U.S. and on the U.S. financial system as a whole. So I definitely agree with what she has to say there.
Your counterpart in the United Kingdom has said that the government there has ruled out a bailout of the UK arm of Silicon Valley Bank. Have you also ruled out that kind of government intervention?
Well, let me be clear that during the financial crisis, there were investors and owners of systemic large banks that were bailed out, and we're certainly not looking, and the reforms that have been put in place means that we're not going to do that again, but we are concerned about depositors and are focused on trying to meet their needs.
Do you expect a deal or something to happen that can reassure the markets before Asia opens tonight and U.S. markets open tomorrow?
We certainly are working to address this situation in a timely way.
Now, I know you know this region of the country so well because you served at the San Francisco Fed years ago. The tech sector has already been suffering from layoffs. It's already under pressure, and this is really the hub of American innovation. How severe will the consequences be for that innovation?
I think it depends on how this situation is resolved, but well aware that many startup firms have deposits and venture capital firms have deposits at this bank that have been affected by its failure. So this is something we're working to try to resolve.
You know, when you look big picture at this bank had massive exposure to this one particular industry. How did government regulators miss that risk?
I would say that although the tech sector has been suffering from a downturn and has had some significant layoffs, the problems of this bank, from reporting about its situation, suggest that because we're in a higher interest rate environment, assets that it holds, many of which are treasury assets or mortgage-backed securities that are guaranteed by the government, lose market value. And the problems of the tech sector aren't at the heart of the problems of this bank.